Okay, happy Saturday everybody. I hope you're having a restful weekend. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Today's video will have a big focus on the economy. There is a bunch of new data out for several key indicators. Now, I appreciate that some viewers will not accept the official data at all, but at the very least, we need to take note of them. We can at least get a sense of the trends, or official data in of itself is also very telling. Now, these numbers that came out yesterday, Friday, paint a very mixed picture. On the one hand, after months of stimulus, we can see some signs of stabilization. On the other hand, as we will see, sectors like property and more systemic challenges remain very concerning. We also note that what stabilization we are seeing is being driven by surging debt, which is not healthy. Let's begin with the more positive numbers, then move on to the more concerning ones. China's consumption posted strong growth in October on the back of Beijing's stimulus measures. Retail sales, a key indicator of consumption, increased by 4.8% year-on-year last month, compared with the 3.2% growth in September, marking the highest level since February. China's overall fixed assets investment, including major items such as infrastructure construction, manufacturing and property spending, rose by 3.4% in the first 10 months of the year, unchanged from January to September. The urban jobless rate dropped to 5% from 5.1% in September. We note, however, that this is a politically sensitive number, so we take this with an extra large grain of salt. These, on the face of them, are relatively positive numbers, but as Peking University Professor of Finance Michael Pettis writes today, quote, "October's economic data was positive for Chinese growth in the short term, but much less so either for longer-term growth and for rebalancing. The best news was that growth in retail sales, a proxy for consumption, was well above expectations. Growth in industrial output, however, was below expectations. The result of production growth continuing to outpace consumption growth showed up in the obvious places. CPI inflation was down a hefty 0.3% month-on-month in October, while China ran another massive trade surplus." End quote. Others also point out that this is all being driven by expensive policy support. Declan Rong, chief China economist at PMP Paribas SA, told clients in a note yesterday, quote, "There are preliminary signs that policies are intended at rebalancing the economy and its growth model. Whether the mild recovery can continue next year depends on what additional policies will be rolled out. We think further policy support is needed to maintain the momentum of growth in 2025. End quote. Gary Ng, senior economist at investment bank Natixis, similarly writes today, quote, "People are turning more positive in October because of the stimulus packages, and the economy has been stabilized a little bit, but not as strong as the market expected." End quote. Then there is property, which is not looking good. Property investment, which has been a major drag on the economy, fell by 10.3% year-on-year in the first 10 months of this year, compared with 10.1%, which it fell in the first 3 quarters of this year. So this property investment drag is deepening. China's home prices continue to decline, just at a slower rate. New home prices in 70 cities dropped 0.51% from September, the slowest pace month-on-month since March. Values of new homes fell 0.48%, the least in more than a year. However, price movements compared with a year earlier, rather than month-on-month, showed a more concerning picture. New home prices fell 6.2%, slightly more than September's 6.1% drop. Existing home prices plunged 8.9% compared with 9% in September. Prices have been in decline for years now, wiping tens of trillions in household wealth. As we have been following closely here on China Update, Beijing in the past 2 months has unleashed its strongest package of policies to boost the property market to date, including cutting borrowing costs on existing mortgages, relaxing buying curbs in big cities, and lowering taxes on home purchases. In October, regulators pledged to nearly double the loan quota for unfinished residential projects to 4 trillion yuan, but much of this has disappointed so far as the market still awaits numbers for special bonds to enable local governments to digest some 60 million unsold units. In a note this week, Macquarie economists led by Larry Hu told clients, quote, "The question is how sustainable the housing recovery can be. In the past 3 years, the sector has had a few false dawns. Each time the housing market initially rebounded on policy easing, but weakened soon after." End quote. Sorry, that was from last week, not this week. China's benchmark CSI 300 index of onshore stocks briefly erased losses in morning trading on Friday after the data release, before closing 1.8% low on Friday as concerns over a deepening rift with the US outweighed signs of economic stabilization. And markets should be concerned about the US relationship. As we've discussed, economists at Standard Chartered PLC and Macquarie Group Limited project that China's economic growth would suffer a hit of as much as 2 percentage points should President-elect Trump follow through on his campaign promise to raise tariffs on Chinese goods to 60%. Of course, we've also seen reports that growth could be halved at these levels. So how should we read these numbers and signals from this data? We have some very mixed signs of stabilization. Chang Shu, Bloomberg Economist chief China economist, expressed this week, quote, "The message from the activity data, the overall economy is bottoming out, but not yet recovering. We see the economy picking up in coming months, but to a large degree this would be thanks to an expected acceleration in fiscal spending as the government strives to disperse budgeted expenditure." End quote. However, Beijing is likely facing a bumpy road ahead on the trade front, not to mention serious systemic crises remain in place, including the property sector and local fiscal conditions. We can also see with this data that there are areas that are only being held up and only showing signs of stabilization because of large fiscal stimulus built on unsustainable debt growth. So I would argue the picture still is largely negative, and policymakers will be concerned as they move into a year where trade, both with the United States as well as the Europeans and others, is going to be hit hard. And as regular viewers know, trade has been one of the only bright spots in China's data. As we move into 2025, it is going to be a very tough year for the economy, and we're going to be following it very closely here on China Update. So if you want to be part of that journey, make sure you subscribe. If you're enjoying this episode, don't forget to hit the like button. Sharing this episode with people who you think will get some value from it is also a tremendous help. But whatever happens, if you do want to follow what I think is going to be an incredibly interesting year to follow China geopolitically, but especially with these economic crises it's facing in 2025, make sure you're subscribed so we can follow along together. Okay, next up, the South China Sea remains a flashpoint of international tensions as China and the Philippines continue to dispute sovereignty over many features, including the Scarborough Shoal. The situation has intensified in recent weeks, with both nations ramping up actions to assert their claims, while the United States has pledged to bolster its alliance with the Philippines. This week, the Southern Theater Command of the People's Republic of China's PLA, People's Liberation Army, conducted joint air-to-sea combat readiness patrols around the Scarborough Shoal, marking the second such operation in 4 months. Chinese authorities have described these patrols as a lawful measure to maintain national sovereignty and deter provocations. Complementing these military moves, the China Coast Guard conducted law enforcement patrols in the waters surrounding the shoal. Chinese officials stated these patrols demonstrate sovereignty and uphold maritime order, further solidifying Beijing's effective control over the area since a 2012 standoff. This week, China also released updated maps of Sansha City, which administratively oversees disputed territories in the region, including the Paracel and Spratly Islands. We remember over last weekend, the Philippines advanced legislation measures to assert its territorial claims. The recently enacted Maritime Zones Act and Archipelago Sea Lanes Act delineates the country's maritime boundaries and underscores its rights under international law. We've also covered recent expressions from Philippine officials of intentions to acquire the Typhon, that's Typhon after Greek mythology, not typhoon, mid-range capability missile system, a move viewed domestically as enhancing national defense and deterrence capabilities. This week, the United States also reaffirmed its commitment to the Philippines, a key ally in the region. China has repeatedly opposed U.S. military deployments in the region, arguing that they incite confrontation and undermine peace. Nevertheless, the Philippines views U.S. support as crucial to countering China's growing assertiveness, and some may even say aggressive behavior in the region. As China, the Philippines, and the United States continue to assert their positions, the risk of miscalculation, of course, looms large. With both sides showing no sign of backing down, the region faces a precarious future marked by heightened militarization and strategic rivalry. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Saturday, have a restful weekend, and I will see you all for a new week of China Update on Monday.